There were no really big surprises in February's monthly credit union estimates. Most of the trends that we're seeing are trends that we expected. Having said that, there are a couple things that stand out as being particularly noteworthy, and one of the things that really rises to the top is the exceptional strength in credit union savings growth. Overall, savings balances at credit unions throughout the United States rose at a rate of about 2.5% in the month. That's just the monthly increase. If we annualize that, it's a 30% increase overall, which is really astounding in the scheme of things. What makes it especially impressive is that that 30% increase annualized occurred in a month that ended on a Tuesday, not a Friday. Normally, when we see strong savings growth, it's because people are depositing paychecks, and those paycheck deposits are sort of artificially inflating the growth in savings balances. But that wasn't the case this time around. Of course, one of the underlying trends that's helping to boost those increases in balances is the fact that here we are in the first quarter, and many consumers, many credit union members are receiving refunds from the IRS for tax payments they made throughout last year. And those refunds are being deposited, and that's helping to boost growth. Now, where's the money flowing? Consumers are keeping it short and liquid. They know that the Federal Reserve has increased interest rates recently. They anticipate further increases in the future, and so they're keeping their powder dry. They're staying short and in anticipation of those increases and hoping to lock in higher rates down the line later in 2017 and into 2018. So that stands out as being especially noteworthy. A couple other things on the lending side of the ledger. We're seeing a continuation of very, very fast growth in automobile lending, both new and used. New automobile loans in the month of February increased at an annualized rate of 12%, and used automobile loans increased at an annualized rate of 10%. So very strong growth in credit union automobile lending specifically. Overall, as is typically the case in February, credit union loan growth was quite weak. Even though automobile loan growth was strong, the overall balances in credit union loans increased by just 0.5% in the month. So, and that is, as I said, to be expected. February is typically the slowest month for loan growth. And so this February, as I say, the 0.5% is pretty typical and is the slowest growth that we've seen over the course of the last year. We expect those trends to continue going forward. Typically, it's not just February that reflects strong savings growth and weak loan growth. March typically reflects those same trends. And so going forward, we would expect to see another solid month of savings growth and then relatively weak loan growth. Beyond that, into the second quarter and beyond, expect those trends to reverse. Expect very strong loan growth for the remainder of the year and a substantial weakening in savings growth overall. We think that the economic results recently is broadly supportive of the consumer sector. That means that more and more people are working. The unemployment rate has now dropped to 4.5%. Consumer confidence is at the highest level that we've seen since the year 2000, and incomes are rising faster than inflation. That means that consumers, members, will be engaged. They will be spending money, and they will be borrowing money going forward. And so our baseline forecast hasn't changed one iota. We expect credit union loans to grow at double-digit rates for the fourth consecutive year. We haven't seen that sort of thing in over 30 years. That's our baseline forecast, and nothing in monthly credit union estimates suggests that won't actually come to pass. So we're pretty excited about credit union results in 2017, despite what we saw in the month of February, weak loan growth. The other thing that really, I think, bears mentioning is the fact that credit union membership growth really increased at a fast pace. Again, about a 0.5% increase in credit union memberships in the month, and on an annualized basis, memberships growing at a rate of over 4%. In context, the Census Bureau reports that U.S. population is growing at a rate of 0.8%. So credit unions continue to grow their memberships at a rate that's well over 5% or 5%, 5 times higher than the rate of U.S. population growth. And again, we expect that to continue going into the future as well. CUNA's economics department just published our member benefits report, which reflects in 2016 the highest level of financial benefits delivered to American consumers since the start of the Great Recession. In total, $10 billion in direct financial benefits that accrue to consumers, to our members, through the combination of higher yields on savings, lower interest rates on loans, and fewer and lower fees compared to banks. So a real great environment from an economic perspective, a great operating environment for credit unions and for credit union members.